Ladies and gentlemen, the stock market is in full-blown panic mode. There is a specific reason for this, and it's coming down to the bank sector. In fact, today is the worst drop you have seen in the banking sector, whatever you want to call it, of the stock market since 2020. This is because a financial institution is going down over 60% on the day due to the bonds. Yes, I never thought I would say that. They basically top-ticked the bond market. And this is leading to fears of a contagion due to the bond yields going so high over the past year. So we have a lot to talk about in regards to that. We got to give you guys this update on AMC and much more. So buckle up if you are not already. Hit that like button and subscribe to the channel if one, you like to make money, you want to see your portfolio grow in value, and you want to see the MOAS, which should be each and every single one of you guys. So let's get into it. S&P 500 down about 2% on the day. You were actually positive 0.5% in the beginning of trading. And this does come down to the banking sector and worries of contagion that is to come. This move today looks like a full-blown panic move in the market. So let's get into exactly what is going on. You have this financial institution, and here's their stock, SIVB. They are a financial group. So they run private banks, private investment. They manage your money. They do a lot of things in regards to investing and managing money. Now, they have lost 60% of their value today. This is because they are raising capital. They're only raising about $2 billion. But the reason why they are saying this is basically the bonds. Now, if you go ahead and pull up TLT, this is going to, and granted, this stock has lost like $100 today, so it was a pretty expensive stock before today. If you pull up TLT, this is showing you the bond prices, right? And as you can see from December of 2021, bond prices just fell off a cliff, going from about 150 down to 90. Well, when this happens, bond yields go higher, right? It's the inverse. It's like, imagine a dividend stock. You bought this for $100. It pays you out $5 a year. That is 5%. Well, if that dividend stock falls to $50 and you're still getting paid out $5, well, you just doubled your yield because the cost went down. So what SIVB did essentially is they bought a bunch of bonds with client deposits they seen basically influx like crazy in 2020 in the $30 billion range. They put it, most of it, in bonds. So what happened is they bought these bonds at like a 1% yield, whereas now it's yielding like over 4%. So they bought them at a really low yield, and then the actual value of the bonds, the dollar amount, went down, right? So they're getting a low yield and they're losing money on the bonds, and now they're seeing a lot of outflows. People want their money back, so they're forced to sell these bonds at big losses, and that is ultimately what is leading them to raise capital. Now, with that notion, people are like, hey, what about JP Morgan? What about Goldman Sachs or Citi or any of these other banks? Didn't they do pretty much the same exact thing? Well, pretty much. And that's leading to fears of really the banking sector. And that's what I would really boil this down to today, this drop in the markets. But you could also say that it is because you have the jobs report coming tomorrow. Now, the market's falling today somewhat cushions you for a bad jobs report tomorrow, because it's probably already, the markets are probably already pricing that in, but it just depends on the severity of the jobs report. If we come out and get like 3, 4, 500,000 additional job ads again after 500,000 job ads last report, well, that's not going to be a good thing. Fed Jerome Powell very clearly has testified in front of Congress and the Senate yesterday and on Tuesday that if this report comes in hot, if this unemployment rate comes in hot and the CPI report next Tuesday, well, they are prepared to increase the pace of rate hikes. And this caused the odds of a 25 basis point rate hike to basically fall off a cliff. Now the markets are expecting a 50 basis point rate hike. And actually, a weird thing about today is, given this fear and really instability within these financial stocks today, basically all banks down over 5% at least, the probability of a 50 basis point rate hike has actually went down. And why is this interesting is because the Fed monitors financial conditions. So if there is all of this fear about contagion, that these banks are in trouble potentially, well, the Fed might not raise rates as aggressively. That brings the whole narrative of what Fed Jerome Powell said yesterday into question. He just said banks were fine, doing great. If they have this problem, the Fed can't raise rates as aggressively as they need to tame inflation. You could be in a very bad situation where inflation runs high, right? Too high, and the financials start to collapse. So it's putting the Fed in a very weird space right here, and it's going to make for a very volatile tomorrow, to say the least. But even next week with the CPI report, and not to mention with AMC more specifically, you have the March 14th vote coming next week as well. You mix all of these things together and you're in for a very exciting start to 2023. Now, let's get into the data behind AMC that you need to know for the day. And as we talked about in the last video and the video before that, the CEO of AMC, Adam Aron, is reaching out to FINRA and the New York Stock Exchange to basically look into the trading of AMC. Now, that is because AMC is on the threshold securities list. There could be naked shorts, and I highly recommend you guys watch the video that was put out earlier, because we broke down what's likely to happen after March 14th. So I don't want to do that too much in this video, but I do expect bullish things. So make sure you guys go ahead and watch that video if you have not already. Now, short interest going up by about 0.5% today, 332,000 additional shares indicated sold short here on the day, 25% short interest of free flow, almost $1 billion worth of short positions now on AMC, 128.25 million shares that are currently sold short, cost to borrow rates varying between 100 and 2.5% from Interactive Brokers, and the Ortex estimate of almost 300%. Far too high. Much higher than where they should be. This can lead to shorts getting squeezed out of their short positions, especially when you add in there all those naked shorts. The short interest could be a lot higher, and I think the simple fact that we're not going to get a resolution next week on the March 14th vote really is a negative thing for shorts in a huge way, because they're going to have to continue to pay these high cost bar rates for months and months and months. Or do they say, yeah, screw that, we're just going to GTFO out of this short position? I think that is a very real question and scenario hedge funds will be faced with coming over the next week or two here, right? So there you have that. As far as the FTD numbers that we are seeing for the day, 3.6 million FTDs that came due today, and then you have 1.5 million for tomorrow. The following week, you start off at 1.8 million and head up to 6.8 million by Friday. So you even have a ramp up in FTDs, and I really want to see what FINRA and the New York Stock Exchange says about AMC, because AMC has been on this threshold securities list for weeks now, and that's apparently what Adam Aron is calling out. So hopefully we do get an update from that fairly quickly. That would definitely be a positive thing. Now, if we don't, it'll probably come over the next couple of weeks regardless. We do have earnings in after hours that I should point out. You have ULTA Beauty, DocuSign, Bionanogenomics, Gap, and Oracle. You do have some other smaller tier companies that report as well. And Friday, or tomorrow, I should say, pre-market, not expecting to be, movers, but definitely Oracle, Gap, DocuSign, and ULTA. These are brand names that you have heard of that can move the markets, can move the sectors that they are in. But by and large, I don't think that's going to matter as much when you're talking about bank contagion and losses in the bond market. Keep in mind, the bond market is much larger than the stock market. You thought the stock market was big. There's a lot of stocks, a lot of investors, a lot of billions in market cap. that's nothing compared to the US bond market. So pretty interesting what we're seeing there. And this, if it gets bad, could call for intervention from the Fed, which is the last thing investors want to see happening right now, guys. So there is that for this Friday. You're looking at about 7,000 calls in the money currently, and about 167,000 calls out of the money, 80,000 puts in the money, and 97,000 puts that are out of the money. For March 17th, you got about 40,000 calls in the money currently, 651,000 calls out of the money, puts in the money 255,000, and puts out of the money at 912,000. Now, if we do take a look at AMC on a more technical basis, and it looks like the market's trying to recover just a little bit into the close, we'll see how long that one lasts. If we pull AMC out to the daily candlestick chart, looks like you did break under this lower end level of this bullish channel. Now, not all hope is lost. We do still have about 25 minutes left of the trading day. If you can come back to a neutral level on the day, you don't even have to really go positive. You're going to break out above that again. That's going to be a very good thing. Now, if that does not happen, I think all of this will weigh on the data coming out tomorrow. This could really give you a 3 to 4% pop or drop in the stock market, especially following what has happened today. S&P, NASDAQ down about 2% at the time of recording this video. So there you have that. I think ultimately when you boil all of this down for AMC more specifically, yeah, the economic data will be important. How the markets move between now and March 14th will be important. But I think bottom line, you get a bullish response after that March 14th vote. No matter which way you chop it, I think shorts are in trouble here. So that is going to be all for this video. Not too much else to actually say unless we want to make an hour-long video. We could certainly do that, and I could ramble on all day for you guys. So that is going to be all for this video. We're not going to do it here in this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description of this video. But most importantly, forget all that BS we talked about here in this video. Enjoy the rest of your day, and I'll see you in the next one.